Okay, here we go. Welcome to Hawk Podcast number 16.
Sweet 16.
That's right. My name is David Liggett, and I am with the one, the only, Mike Triple Bogey Netzer.
Triple Bogey Netzer, which we will get to later.
You're not. I wouldn't. I'm saying that as your name because you suggested it. That was not like I nicknamed you.
Yeah. No, but it sticks and it's appropriate.
We are here on our 16th podcast. We are live from Dallas, actually. And did you know, if you're listening to this, did you know we do live LinkedIn streams about our podcasts and things like that? You can check them out. We post when we're going to do that a couple days before, and then you can actually hear what we're speaking on for our podcast, and you can actually tune in live, and we do little segments here or there. So that is just a PSA.
Yeah, check it out. Just another way you can ask DCH. If you've got questions you want to throw at us, and the David, the man, the myth, the legend will attempt to answer them to the best of his ability.
That's right.
And if not, he can hit pass and go to the next question on the pyramid.
That's right. And so we've got some great topics today. We are in part 4 of our 4-part series on challenges faced by the different roles in the data center industry, Mike.
Quick recap. Part 1 was the end user. Customer is always right, and as we learned, maybe not always the case in the data center industry. Part 2 was on the operator. Again, there are folks running these centers. Part 3 was on the consultant, and today part 4 is on the investor. And again, we've seen just a figurative flood of money come into the space, and everyone's trying to figure out how to get the best return on their investment. So we'll talk a little bit about how they can evaluate the market and just evaluate the context or the framework of the market.
Yeah.
So
go ahead.
Yeah. What else you want to add there?
I was just gonna say, I'm excited about this because your point is, this is a and I'll hit on it in a little bit, but 5 years ago, the space wasn't as visible as it is today from an investment perspective. So this is real time, helpful info to people that are in that space. So I'm excited. Yeah,
you bet. So before we do that, I want to give a quick shout out to the Rhett Sullivan Foundation. We played in their golf tournament yesterday. Ton of fun. And the guy who runs that foundation, Ryan Sullivan, is a local data center guy. And there were just a ton of people from the local Dallas data center industry, even some folks from out of town who came in to support the event and just, again, really well-run event. It was a ton of fun.
Yeah. Actually, I feel like the industry really showed up strong for the Sullivans and their foundation that honors their son. And it was a fun event, but it was really cool to see. They raised a ton of money for their foundation, and they're just doing some great things. So Ryan's with Lincoln Rack House. He helps run their business, and so it was a great event. There were tons of people from Dallas and even people from out of town that were at the event as well. So it was great.
Yeah, super fun, and I think I've earned and solidified the nickname Triple Bogey Nets. Golf Scramble, I'm not sure how many of my shots we used, but it was clearly in the 6 digits.
Some of them.
Triple digits.
We
Single
used some
digits.
of them.
Yes,
so.
We used a couple. So I think we ended up around 5 under. I think the winner for that tournament was around like 18 under.
We were close, Mike.
We were close. It's basically an accounting error away from the win. So next year we'll be back in full effect. I commit to being on the driving range one time in the next 12 months.
Will you be double bogey, Mike Netzer?
That's the goal. Is to graduate and get promoted
one step at a time.
Yeah. So again, how was your weekend?
It was
big
great.
Cowboys win.
Yeah, big Cowboys win, which was always fun. So I've been a Cowboy fan long enough to see some opening weekends where it's been a little disappointing, but if you're a Cowboys fan, there was literally nothing to be disappointed about after the game on Sunday. It was fun.
Hey, Jerry Jones got out his checkbook, and he expects a return on his investment.
Here's what I would say on that. If I was Dak Prescott and Amari Cooper, you know what I'd do, Mike?
You'd cash those checks?
I'd go to Cabo this week, and I'd say, hey, Jerry, I'm going to be in Cabo, and when you're ready to write that check, call me. But until then, that's where I'm going. Because he did it. I point to Zeke and go, he did it, work for him. I'm doing it, and it worked for me.
You are the master of leverage.
Oh, sure. If you need some evidence, just look at the last game.
There we go.
Anyway.
Cooper was great.
By the way, Dak's not asking me for advice, so I just want to make that
is that
clear.
not
him that's been
texting
him.
you
Yeah,
in the intro here?
Him.
Okay.
It's not him.
So I am solo dad this week. My wife's out of town.
Interesting.
Currently, as we film this, on a plane flight, which segue to a fun data center history fact. So one of the first kind of large commercial data centers was built by IBM for American Airlines, the local DFW company. And I kind of read up in this. The story is kind of funny. There was a big IBM sales guy, and he was ended up on a plane flight next to one of the presidents of American Airlines at the time. And at the time, IBM had built this big system for the Air Force to kind of track all their flights, and he basically sold them on it. So something that'll make all the sales guys who listen to this chuckle. It was from 1953, that initial conversation. 1957, they had an agreement in place. So 4 years. Be patient, folks.
It's a long sales cycle.
And then on the development side, it was another 3 years before they even got the experimental
Interesting.
thing in place. And then by 1964, they were up and running, and that system is called Sabre, which a lot of people have actually heard of it. It's been in the news.
Yeah.
Anytime there's a reservation screw up, it gets referenced. But all in all, this prior system was literally these call center reps would have like a card with an outline of the plane, and they would like mark off a little X when somebody called in and booked that flight, that seat on that flight. So a fun little bit of interest. And again, it's a local company, so we probably hear more about it than other folks. Anyways, fun little piece of data center history. Again, this industry, as you know, relatively young in the grand scheme of things, but does have some roots that go back a little farther.
Yeah, you bet. And I think that's one of the interesting things to kind of kick off into our segment on the investor community, and it is a young market. I mean, Mike said that, but it was, I think, 1994 when 2004 when the first data center operator REIT went public. So if you think from that perspective, it's a relatively young industry. And so we're going to focus today on ways that the data center investment community can look at the data center market, like the specifics, the analytics behind how the market grows and how it ebbs and flows. So that's what we're going to do. One thing, like, it's hard to predict the future, but one thing we can predict is that things will change. And so one of the biggest changes we've seen over the last 5 years in the space has been the increased interest from the data center investor, or the investment community. And it's clear, at least from my perspective, that the industry is on the radar like never before in a number of different ways. And so if you're looking at this market from a commercial real estate standpoint, and think of things like the office market, the industrial, the retail, the multifamily investment worlds certainly present challenges, but they're an entirely different set of challenges when it comes to investing in the data center market because of the unique dynamics in the space. And so that's what I want to cover today.
Yeah, looking forward to it.
Yeah, and one of the things, so I'm a father of 2 boys, 12 and 9. So one of the things my wife and I often are trying to do is like figure out fun things to do with our kids as a family. And so my son got a puzzle as a Christmas present about 2 years ago, 2,000-piece puzzle, which is, if you're in the world of puzzling, that's a lot of pieces. And so we decided to do it as a family. It's been good fun for our family. But Mike, what's the first thing you do when you put a puzzle together?
Yeah, the first thing I do is flip all the pieces over, which I know it's not what you're good at.
What's
the second thing I do is get all the edge pieces
That's
together.
right. Yeah, you find the border pieces. I mean, you have to get the border set before you start filling in the rest. And so that really builds your framework around, what you're going to do. And so that's exactly what I want to do today. And that's kind of how I want people to be thinking is, how can we build a framework around this market, how it's growing, challenges with demand and how that ebbs and flows, and then how to look at pricing. I think if you can get that as an investor, there's 2 things that allows you to do. The first is to get an understanding of the market faster, or to speed that process up. And so I think when you have an opportunity that you're evaluating from an investment perspective, time is everything, because you have a specific amount of time that you have to look at facts about the market, and then you have to make assumptions based off those facts and then figure out what you want to do. So one of the things we want to do with this, and I think this framework thinking will be helpful in, is understanding the market and speeding up the process. The other thing is just to make the best decision. Sometimes it makes sense to move forward with something. Sometimes it doesn't. But that's what I think the information and kind of this framework can be helpful with. So that's what we're doing. Again, this is 3 frameworks for the data center market investor. Number 1 is the data center market size framework. And so this framework sheds light on market supply and growth. And so one of the first things that you need to know about the data center industry is, and this market size framework is not based on square footage. It's based on power. Now, certainly, please hear me say that the data center industry is built in buildings that are, a certain size, square footage. But because you can essentially put any amount of power within reason in a space as long as you can cool it, what the rent is based on in the data center industry is power. And so that is what is driving this space. And that's what I want to just make sure everybody knows. So when we actually size markets, we size them by power at Data Center Hawk. That's one of the things that we got in the space to do, is just make sure we could say why one market is one size and one is the other. And so what I actually wanted to do was run through some of the largest U.S. data center markets from our data to show some examples of how we do this. And it'll also show you the growth that's taken place over the last 2 years, because that's what I pulled the numbers from. So, I mean it's pretty simple. But as an example, I'm going to go through Chicago, Dallas, Northern California, Phoenix, and Northern Virginia, and I want to talk through the changes there. So, again, Chicago in 2Q 2017, the market was 274 megawatts of commissioned power, multi-tenant data center power. In 2Q 2019, it was 325 megawatts. So you can see that growth that took place. Moving to Dallas, 304 megawatts in 2017, 376 megawatts in 2019. Northern California, 354 megawatts in 2017, 424 megawatts in 2019. Phoenix, 185 megawatts in 2017, 237 megawatts in 2019. And then Northern Virginia, 736 megawatts in 2017 and 1,107 megawatts in 2019. And so there you can see, and the reason I actually pulled those out is because I wanted to talk through, I wanted you to actually hear the different changes in growth related to, the commission power. Because you can kind of see, this market grew 50 megawatts, this one grew 100, this one grew 400 megawatts. And there's a key distinction between those.
Yeah, and you can also do the quick math on percentage growth.
Sure.
And so you look like Chicago 20%, Dallas 20%, Northern California 20%, Phoenix 30%, Northern Virginia 35 to 40,
sure.
Quick math, and just see, again, put those numbers in context. Because if you just say in a vacuum, this market grew 20 megawatts, I have no idea what that means.
Yeah, you bet.
So being able to compare markets with one another is also extremely valuable.
Sure, and just seeing those, and to your point, I mean, there's different reasons why these markets function the way they do, and certain markets have dynamics that others don't. And so, the Northern Virginia example is we've just seen so much large growth there, a lot of pre-leasing that takes place, and so that's, that is just some of that growth that's being seen there just in the last 2 years. The other thing I want to, so within that framework of market size, we're talking about how big the market is. That's commissioned power. The other thing I want to build a framework around is actually planned power. And one of the things at Data Center Hawk that we do is we really try to help people think of the market in a certain way as it relates to both power and space. But the planned power, from our perspective, this is when a data center operator or a developer acquires a parcel of land and then begins to walk through the process of planning how much commission power, not utility power, but commission power they could deliver to that parcel of land.
Yeah, and just quickly explain the difference between commissioned and utility
sure,
power.
Sure, you bet. So the commission power, again, is the amount of power that the company will lease to other companies. So the infrastructure they will actually lease. The utility power is the total power that it takes to actually bring all the systems and all the additional building components up to speed. So as an example, a 10 megawatt utility power might only have 5 megawatts of commission power to sell to the market, if that makes sense. So again, that's a very simple example, but that is, that kind of, that will show you the distinction between the two. From a planned power perspective, I love what I'm about to go through because this really highlights like some of the key differences in trends that have taken place in the last 2 years. So Chicago, 2017, 260 megawatts of power, of planned power. 2019, 407. Dallas, 2017, 421 megawatts of planned power. In 2019, 665. Northern California, 2017, 114. 2019, 536. Phoenix, 2017, 265. 2019, 1,193. Northern Virginia, 581 megawatts in 2Q 2017. In 2019, 2,605 megawatts, so 2.6 gigawatts of power.
And we've talked about this a little bit on past podcasts, but just give us 30 seconds on, what does that planned power number indicate?
Yeah, totally. I mean, and again, that is what you can pull from these numbers or these trends. And what that shows you is that, like never before, the data center operator community has really been positioning themselves to handle the anticipated growth, not just today, but down the road, of data center users. Enterprise users, large hyperscale companies, companies that are cloud providers. I mean, these are the companies that are leasing this infrastructure. Now, it's really important for people to hear. I'm certainly not suggesting that this means the market is oversupplied. The data center operator community has become much more, I would say, appropriate with their capital deployment and deliveries of these spaces. And so they might sit on a piece of a site acquisition for a long time before they actually go to begin the development process. But they certainly don't want land acquisition to be a problem and to slow down the speed to market, which is one of the things that data center users really value today.
Sure.
Go ahead.
Yeah, I was going to say, one of the ways that it kind of helps me understand is, again, let's be clear, neither of us are investment professionals.
Sure.
And so we're data center professionals. And
Sure.
so, but when you look at like a company of like you're trying to evaluate market by market, and you look at a company that's got, two companies both had $100 million in earnings, but there's all these other metrics by which you would evaluate a company.
Yeah.
Again, not necessarily a data center company, but any company.
Yeah.
And so what we're trying to do is say, hey, what do we, and it's operating income or profit percentage or whatever the case may be. And all we're trying to do is say, hey, here's what we think are the key metrics by which we assess a data center market.
Yeah.
And that just helps me understand a little bit better.
Yeah, and it's just key to making the best decision. I mean, part of what we've had to do is take this market, which, obviously this is going into physical real estate assets, but it's so different than your traditional commercial real estate market types that we've really tried to apply the same mindset within reason so that people can understand it quickly. So anyway, so framework number one is around market size, commissioned, available, under construction, and plan. That's how we think about it. And what I highlighted was, again, the size of the market from a commissioned perspective and what is planned down the road. And I think we've flashed some different graphics up here that show what those are, and then those will be in the show notes as well, I'm told, in my in-ear monitor. Framework number two is around data center absorption. So this framework sheds light on market demand, where the first framework really shed light on market supply. This one is more focused on demand. And this framework is built around power as well. Absorption is a way to measure market demand for a specific time period. It's what the traditional commercial real estate industry uses to measure demand in the other verticals that we mentioned. But if you're not familiar with the term, here's I would say the more formal definition. It's the physical net change of the supply of commissioned power in a given market over a specific period of time. So it's a good way to look at the market. And I'll give you a good example. We track absorption data on a quarterly basis, Data Center Hawk. And so traditionally, Northern Virginia, will be anywhere from like 25 to 50 megawatts of absorption on a quarterly basis. Just, fluctuates based on demand over the last several years. In the second quarter of 2018, we measured 172.05 megawatts of absorption during one time period. And so that was obviously a considerable jump. It was one of the data center industry, if not the biggest absorption quarter ever. And, a lot of that ties back to the large users that are looking in that market and the fact that the market could handle that. There's the infrastructure that's there. There's the connectivity there. There's the providers that are there and have the supply that are there as well. And so, anyway, that's one way we look again at absorption or at market demand is through absorption. the second example I want to bring up is toward the end of 2018 and beginning of 2019, it was a softer market from an absorption standpoint, really across the U.S. But then in the second quarter, we saw an uptick in demand from an absorption standpoint in areas like Northern Virginia, Dallas, Northern California, Phoenix. All markets posted stronger growth than they had in the past, and so that's a great way for us to look at different geographies and measure how much demand is heading to those places. And this is really important if you think about it from a data center user standpoint, because geography does matter. You can build a data center anywhere. It just costs time and money. And so it's just really important to remember that there's real costs associated with where you put your data center facility, and which we talked about in another podcast. But again, that's the data center absorption framework. So first one we talked about was market size. We just talked about absorption, and now we're going to talk about the pricing framework. So how do you get your head around market pricing? And what does that mean to the overall investment picture if you're trying to get an ROI on a facility or with whatever it might be? What does that mean? So what I thought I'd do here, Mike, is highlight some of the things to pay attention to if you're an investor in the space to get a true picture of what's happening. First, I feel like it's important to understand that what type of data center market investment you're making, and then being able to really understand similar approaches that other companies have taken. We certainly have seen the data center operator community building turnkey data center facilities. So these are some are smaller than others, some are massive, but this is the infrastructure that's housing leased type opportunities from data center users themselves. We've seen the enterprise data center market. These are companies that went out and built, owned, and operated their own facilities over the last 10 years. And those facilities now are coming full circle. And some of those companies are actually wanting to sell their assets and either do some sort of a sale leaseback or completely move out. And so those are different opportunities. So it's just really important to understand those are different type of investment opportunities. And you really got to understand the dynamics behind what those are.
Real quick, talk about, in a market, even a large market like Dallas or Phoenix or any of those ones you named, one provider can swing, an average market pricing and just kind of underscores the need for, as much and as granular pricing data as you can possibly get your hands on.
Yeah, and it's a much more competitive market today than it was, 2 years ago, 5 years ago, even 10 years ago. I mean, I remember I have a story that I want to tell that I think illustrates that point. I think it was 2009. I worked with CBRE, and my team was helping a client that had a 2 megawatt production requirement. I'm actually here in Dallas. And at the time, there were literally two options. That requirement today in Dallas would have 10 legitimate options to go to. So it is a completely different market today than it was then, and the competition obviously has driven some aggressive pricing. It's not like that in every market, but you certainly see that in different markets across the U.S. And then the last thing I'd say is, and this is really important to note, but what's being built today is very different than what was built, 3 years ago, 5 years ago, 10 years ago. I mean, the data center operators are building more efficiently. They've optimized their supply chain accordingly. They're deploying capital more efficiently. And so some of those savings are getting passed on to the data center user themselves. So that's one of the reasons that the pricing looks different. But again, you have to understand the market pricing if you're an investor in the space and some of the dynamics behind it. So those are the three things that we would say build a framework around. The market size, understand how big a market is, what has its growth pattern been over the last 12 months, 36 months, 5 years, et cetera. 2 would be get your arms around the absorption. How much demand is taking place? How many data center assets have been sold in a market over the last 12 months, 24 months? And then also 2, get your mindset around the pricing in a market. What are the dynamics changing that pricing? And if you can get build your frameworks around those 3 things, I think you can make decisions fast and educated in the space.
Awesome. So we'll say, we'll put these notes, we'll put them on our blog, we'll put them in the show notes, but also, all those things you mentioned, capacity, planned power, absorption, vacancy, those are all things we track on a quarterly basis, like you said. So if you want more information, go check out datacenterhawk.com/insight. And again, that's all tied into, for those of you who don't know the history, one of the reasons Hawk is our mascot is Hawks have incredible vision. They can see a mouse, in a field from hundreds of feet in the air. So again, that's what we're trying to do here.
Yeah,
is look at the market, get as much information as you possibly can, and then provide it in an easily digestible way to folks who are coming on, and specifically the investors.
Yep, right on.
So, okay, great stuff. All right, we got a new segment to debut here called Market Minute. We're all about alliteration here at the Hawk. So we're just going to take a market, and again, maybe a market that's not as much on the national radar.
That's good.
Today, and talk a little bit about what makes that market distinct. So today we're going to talk about Salt Lake City.
Come on.
The Great Salt Lake. And so if you look at it from a size perspective, it's like about 40 megawatts, and it's really dominated by just a handful of providers. So DataBank, Flex Central, and The Line are all there. There's a couple smaller ones, but that's really about it.
Yep.
On the enterprise side, you see Oracle and eBay both have a presence up there.
Yep.
But again, so there's activity there for sure. But talk about what makes Salt Lake City unique. What do you see for Salt Lake going forward in that market?
Yeah, you bet. So, a couple quick things. When you see some of these smaller markets start to grow, there's somewhat of a formula. Each one's a bit different, but here's what I think it is. Number one, traditionally you have some businesses there that would much rather keep their environments actually within that market versus going to other places. But historically, they haven't had any place to go to. So now what you have with some of these providers that you mentioned is a more mature data center operator market. So they really now have legitimate options that they can go to. And these are providers that are thinking ahead, really pushing different technology solutions, infrastructure solutions, and providing those. And so from that perspective, I would just say, number one, there's options. Number two, it's a reasonably priced market just from an economic standpoint. So, if you're thinking about going here versus somewhere else, this market is going to be right in the mix from a pricing standpoint. The number three thing I would say is while it's in the western part of the United States, it's not along the West Coast. So as you move to the coast, prices get higher. And I think that, some of the markets that are like close to the West Coast but are not West Coast specifically are going to benefit because companies, find those areas attractive, and there's, a good amount of people there. So, all those reasons or all those ideas are reasons why it might be 40 megawatts today, but, here in 12 months, 24 months, that number's going to look different because of those things.
Okay. So if there's a market you want us to ask David about or ask DCH about,
let's go.
Write in, let us know. We'll talk about Cleveland. We'll talk about Tucson. We'll talk about Omaha.
Yes.
Bismarck. I think there might be 2 data centers in Bismarck, but hey, let's
on.
talk about them.
Yeah.
All right, great stuff. All right, role play. David, today you are an economic development manager for call it mid-sized American city, and you're trying to attract some data center interest to your city. And what are you doing? What's your 5-point plan? What's your Elizabeth Warren 26-point plan? And just talk us through, like, hey, what are some of the things you would do to bring some data center investment into that city? Yeah,
I think the first thing you want to make sure that you are presenting a really good picture of the infrastructure in that space, and so, or in in your market. So you really have to have your arms around, how much power can you provide today, and how much power can you provide in the future. You really have to have your arms around renewable energy and how much, what the access is like from a renewable perspective. The connectivity obviously is a big piece of the infrastructure story. So just getting your arms around that. The second thing is you have to make sure that when you have the opportunity to present or talk about this, it isn't the first time you've done it. So there's some communities across the U.S. that are very well versed in this, but most aren't. And so I think it's important to go, if this is a market segment we want to go after, we need to put the work in on the front end to make sure that we know what we're doing when we have the opportunity, because there aren't a lot of these opportunities. This is not a manufacturing facility. This is not a call center. This is not, office space. This is, data center facilities, and typically the companies that are going to put very large facilities, in these areas are looking at things like infrastructure, tax abatements, power cost, renewable energy, et cetera. And so those are the things that I'd be focused on. And this is, I would say too, you probably need to make yourself known at different probably speaking events that the data center community will attend. I think it's just a way for visibility, and I've seen several economic development directors do this, and they've been successful. It takes a bit of time, but if you can commit the time to it, it only takes one deal. One large billion-dollar investment in your community to make all that time worth it. So
yeah, that was great stuff. That's what I was going to ask. Say, hey, if maybe you feel like a city's got a reputation and you're trying to turn that around, so what do you? I was going to say, hey, what do you do to kind of get the word out that we're open for data center business? But I think you nailed it on the head. So, all right, thank you. That's role play. Next, hyperscale hustle.
Come on.
Obviously, good stuff. We get a lot of interest on this segment specifically. So I want to talk about, last time we talked about, hey, the buyers. If you remember, we talked about the oligopsony that exists in the data center market. I
remember that.
I mean, how could you forget that
5 times
specifically?
Since.
So yeah, I really weave that into my everyday usage. So, really want to talk about today, hey, what are the kind of the market characteristics that are going to be attractive to those large buyers, folks that are deploying massive amounts of power and space here. And one of the things we talked about is 10 years ago, there were certain trends in place. So I kind of want to talk about those to put it into context and also talk about, hey, how and why have those changed over the last 10 years?
The change has really been around location and what those companies value. In the past, we saw them really focus on areas that had, infrastructure, just like we talked about a little bit before, tax incentive abatements that were highly aggressive. They're really aggressive. And then, the infrastructure was traditionally cheaper than it would be in other markets. The change really happened 4 or 5 years ago when those companies really decided that they wanted to be closer to the user. And a lot of that supported, the cloud offerings that these companies were providing to businesses. And so the need really came from users of their cloud platform. And so, that's really what changed the approach. The size is similar as it relates to how much power they're leasing, but I think the big change is just location. And that's why areas like Northern Virginia, Phoenix, Dallas, Chicago, Northern California, and even some secondary markets have grown. We're now starting to see that in Europe. At least last quarter and in 2018, you really saw, significant growth in the European markets. And so, but it really has to do with those companies wanting to be where large populations are and where the data center industry is very competitive. And when you have those characteristics, you're typically going to see some pretty large growth.
Okay. That's awesome. Great stuff. Again, if you've got a hyperscale hustle question, write in.
Yeah, let's go.
Again, we've got our best people monitoring all those social media channels. And we'll get your question answered just as quickly as we can. All right, last is our Ask DCH question of the day, our segment here. So, we got a question recently from is actually an investor user on our site.
Mm-hmm.
We're talking with him, and he was asking, hey, should we be worried, when we're looking at these, about doing some development or investing in some development, should we be worried about latency concerns between Fauquier County and Loudoun County?
Sure.
And so maybe answer that, but also talk about, how Fauquier County fits into the greater Northern Virginia landscape.
Sure. I mean, it's very clear that connectivity has become much more important today in the discussion about data center development, where end users want to go, than it was probably 5 to 10 years ago. And there's a number of reasons why. But so the first thing I would just say is, where the connectivity is strong, that's typically where data center users want to be. Where there's multiple options, where there's, not just metro connectivity, long haul connectivity, obviously, or fiber is connecting city to city, but now you're starting to see even subsea cables, and some of that really drive data center demand. So I think all of that just points to connectivity is becoming a much bigger part of the conversation. As it relates to this example, at least the growth we've seen in the Northern Virginia market typically has been Ashburn, cities around Ashburn, a little to the west, but starting to come to the south. I think it will come slower to the south over time, but it certainly seems like, if you take Northern Virginia as the north tip and Richmond as the southern border, what will happen in that region in the next 10 years, I think will be really exciting because of some of the things. I mentioned the subsea cables in Richmond or in Virginia Beach, and then in Richmond and some of the things that are happening there. So I certainly think we'll see growth to the south, and we are, but it really just depends on the user and how they evaluate latency and how important that is to them. But I just think, if anything, this just shows that the connectivity conversation is really important, and you really have to have that story down before you're going to go invest, $25 million, $50 million, however much it is, in that project.
Awesome. So I'm a little surprised you didn't give me more kudos. My pronunciation of Fakir, but that's a tough one to get out. It's a tougher one to spell, but
yes.
Okay, great answer. Thanks, David, as always. So that's Ask DCH. That's our run sheet for today. Anything else to add, Dave, before we check out?
I just think, so again, just a quick highlight. If you're an investor in the space or you're looking at this market, I mean, these are things that hopefully are helpful to you as you think about how to evaluate opportunities. Market data is obviously critical to those, due diligence exercises to ensure that you're doing the right thing with that capital. So from our perspective, thanks for listening. If you want to go back and listen to our last 4 podcasts, 12, 13, 14, 15, and 16, how about that? Those are the ones that we really focused on: data center users, providers, consultants, and investors. And it's some really good information on how to grow in the space and how to stay up with some of the challenges that are there, but also how to solve them. So this has been Hawk Podcast number 16. Michael, thanks for being here.
You
bet.
Great
thanks for listening and watching, and we will catch you on the next one. See you.